Should you buy the dip on Visa, ticker symbol V? It was down almost 5% yesterday and is currently at $205 a share. What we're going to be doing is looking at the reason for this. Then we're going to be looking at the fundamentals of the company to give a fair value based on discounted free cash flow and the Buffett-Graham intrinsic value to see if this is a buy during this time it has had a little bit of a dip. So what is the reason for this dip? Well, if we just go to Financial Times, Amazon to stop accepting Visa credit cards in UK battle over high fees. E-commerce company seeks to push customers to use other payment methods. As said, Amazon has banned UK-issued Visa credit cards in a protest at high fees, sparking fears of wars between the retailers and the payment network. Visa's shares fell more than 5% after this news. So you can see that it's currently down to $205 a share. So what we're going to do is look at the fundamentals. But first, can you please give a like on the video and subscribe if you're not already subscribed? New stocks every day. So let's have a look at the fundamentals. So Visa currently has a market cap of 436 billion, current share price of 205, 52-week low of 292, and its all-time high of 252. Kind of get back to this previous amount. It pays a 0% dividend, but I've got some interesting stuff coming up on the dividend, and the ex-dividend date is in February, so you'd want to buy before then if you wanted to get paid. So what do we look at? Is the PE ratio less than the market? No, it's not. Visa has a relatively high PE ratio of 36.4, which is higher than the market's 28.5. Next is the revenue increasing 20 billion to 24 billion. Not a massive increase, but an increase nonetheless. That is a positive. Are they getting more profit? Yes, they are. 10 billion in profit to 12.3, almost the increase of the revenue, but that is a higher percentage of the profit has been increasing. Now we want to see, are they buying back their shares? And yes, and ignore that number, that is clearly incorrect. The right number is 2.4 billion to 2.1. If they bought back that many shares, that would be great news for everyone, but that is just a typo. So they've actually been buying back their shares, which is good news for two. They're rewarding investors for having their stock, because if you own 10 shares in a company, and the total shares outstanding are 100, you own 10%. If the company buy back 50 shares, you would own then 20% of that company. So they're rewarding shareholders, not quite from 22 billion to 2, but 2.3 to 2.1. And then finally is the free cash flow increasing. Free cash flow has gone from 12 billion to 14 billion. So overall, that is 4 passes. The free cash flow ratio, 436 billion divided by 14 is 30, which is actually lower than the PE ratio, which is good. And they do pay that 0.7% dividend, and the total dividend paid is 3 billion. So it is a very safe free cash flow. The dividend is safe with that free cash flow ratio. So just touching upon that dividend, that is an annual dividend of $1.50 a share. It has a dividend increase record of 13 years, which is great to see. 76% 3-year dividend growth. Payout ratio is fine, and the payment is, for those who have the stock already, December 7th, but the next payment will be, the ex-dividend date will be in January, and it'll be sometime in Q2. So you can see here the increase has been increasing. If we go back to 2013, it was 33 cents quarterly, and then currently it is 37 cents. That has been increasing very slowly, but still increasing nonetheless. Now we want to look at the discounted free cash flow model and the Buffett-Graham intrinsic value. So I've calculated the future free cash flows of Visa, and then we're going to get a potential value of the future cash flows, the terminal value of the company, and then discount it to today. So what does it say? Well, it actually has a calculated stock price of $219.60, which currently means it's trading at a 7% discount. So this stock was pretty fairly valued before the dip. So definitely some small amounts of money being made, but not massively. And then the Buffett-Graham intrinsic value, they have a fair value of $245 a share and a Graham price of 180. So if it ever gets to 180, that's a buy and hold. It's currently at about 200. So it's very close to Graham price, and a fair value of 245, which if we go back to here, that is basically where they were this time in August and September before this massive dip. So the models are saying it's a buy. The free cash flow is saying it's slightly undervalued, but the Buffett-Graham intrinsic value does think it can go up to around about 240 in the short term, which would be a pretty good amount of profit on this current dip. So it is looking like it is potentially a buy. But if we just look at the technicals here, the price has dropped below all of the major moving averages, which is very bearish signs If we go to the RSI, you can see that it is in, oh, I don't want to pay for this, so I'm just going to get rid of 2 of these. If we go to the RSI, that is the relative strength index. You can see it's in trending towards oversold regions, but unless it gets really underneath that, that is when it will be a buy signal. So I would say not buy right now on the technicals. And finally, one of my favorites, MACD, and here you can see massive negative bearish signals here. The MACD lines are crossing, it's way below the zero, so the technicals are saying it's not a buy, I would say, but fundamentally this company is still pretty solid despite the bad news, and does have estimated fair values of over $210 and potentially $240 a share. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.